You're talking about a sharp fall. Now, Bitcoin fell as well. That wasn't the catalyst, but I think what people are going to have to get used to is this relationship between the retail part of the stock market and Bitcoin. Because I think the energy for Bitcoin comes from the people who have followed you for a long time. It comes from those people. It doesn't come from hedge funds. If anything, I think hedge funds are so skeptical that whenever they see a simple moving average breakdown and they want to short something, Bitcoin gets a very crowded short. So if you take the hedge fund and the retail unwinds, you add that into what we were going through anyway, which was consistent selling from OGs, I think it made sense for us to go down. And we did talk, and I remember saying we could go down to 80.
Momentum, AI, and macro forces are all colliding. Here's why Bitcoin's next move could surprise many. Jordi Visser explains that November was a historic month for the stock market, with significant volatility affecting various factors, particularly momentum. He highlights that Bitcoin, closely tied to momentum trends, experienced declines alongside small-cap stocks, though this drop was not the catalyst for the market movements. According to Visser, the interplay between retail investors and hedge funds is crucial in understanding Bitcoin's behavior, as retail participation drives much of its energy while hedge funds often contribute to crowded shorts. Visser also emphasizes the relationship between Bitcoin and broader technological trends, particularly AI. He notes that while November sparked fears of an AI bubble, the longer-term trajectory of AI, especially in its physical applications, could positively influence Bitcoin relative to growth stocks. He points out that Bitcoin's stability and potential are less about short-term price movements or network moats and more about its position as a digital asset in a rapidly evolving financial landscape. The correlation with AI innovation, including the shift from purely software-focused applications to broader physical and industrial uses, could position Bitcoin for renewed strength next year. Visser situates Bitcoin within the larger macroeconomic and geopolitical landscape, connecting its dynamics to AI competition, economic inequalities, and digitization trends. He underscores that AI is now the dominant force shaping markets, influencing everything from job losses to economic polarization, and that it also offers potential solutions for the future. By understanding these macro forces and their intersection with Bitcoin, investors can better anticipate trends and the broader digital asset ecosystem, rather than focusing solely on immediate price fluctuations. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
I think, again, and we talked about this during the month, and I don't want to minimize the drop, but November was a historic month for the stock market as well. People may not know that, but I spent a good portion of my career on factors and growth, value are the ones people know, but momentum. And when you take factors, especially a momentum factor, which we've talked about on here before, Bitcoin is very much correlated to momentum, but it's the long side of momentum. So whenever people hear factors, think of it as the top 10% of some factor relative to the bottom 10%. And in this case, the long side of momentum during the month of November relative to small cap stocks, which allows you to kind of normalize the volatility, similar type moving things, had its worst drop since the great financial crisis. So you're talking about a sharp fall. Now, Bitcoin fell as well. That wasn't the catalyst, but I think what people are going to have to get used to is this relationship between the retail part of the stock market and Bitcoin. Because I think the energy for Bitcoin comes from the people who have followed you for a long time. It comes from those people. It doesn't come from hedge funds. If anything, I think hedge funds are so skeptical that whenever they see a simple moving average breakdown and they want to short something, Bitcoin gets a very crowded short. So if you take the hedge fund and the retail unwinds, you add that into what we were going through anyway, which was consistent selling from OGs, I think it made sense for us to go down. And we did talk, and I remember saying we could go down to 80. It wouldn't be a problem. We did. I think the bounce back has been quite impressive, but it's also coincided with the stock market going higher. One of the things I said, which I feel very strongly about, based on my views on next year in the stock market, based on my views on where AI is, There were a lot of AI bubble fears in the month of November. A lot of them were related to OpenAI, to NVIDIA, to CoreWeave, to Oracle. There was a whole bunch of things going on where people were freaking out. I think people have to get back to the relationship of Bitcoin to AI. Now, where we're finished at this 92, 93, we're unchanged for the year. So I always get back to this thing with Bitcoin that I believe in. I don't worry about where it's going to be over the course of the next 20 years. I don't worry about the network effects. I don't worry about it being the only thing that doesn't have a moat. But the most important thing for people to leave from me today and this weekend, which I will cover extensively on my YouTube, we are at a major inflection point that to me is very similar to what ChatGPT did. So we're ending LLMs. And the reason this is important for Bitcoin from a where the money going type thing, the fiat assets are dominated by 7, 8 companies in terms of their market cap. They're all in some way associated with AI, but they're all associated with coding. This is the year that vibe coding, which everyone now knows is a word, was a ChatGPT moment. And part of the factor unwind, part of the thing that has hurt Bitcoin all year has been this move away from growth. And when I talked about this a couple of weeks ago, there was the negative comments were about, oh, now Jordi's bearish on tech and blah, blah. I am so bullish on AI, but I do believe that we are entering a new phase of AI, which has nothing to do with the textual and software side. It has to do with the physical AI side. And I think it started, Bitcoin's going to benefit next year relative to growth stocks, but this year it got caught up in the growth. Because rates are high and not coming down fast enough, Donald Trump is correct that this is a problem. On the flip side, you have AI that's also disrupting and causing small businesses that can't compete with the behemoths who have AI and are kind of disrupting all of this. So you've reached a point that, on your point, these macro forces, they're all coming together. And that is why and I mean, I'm getting into a lot of things that we could double click on, but the Genesis mission is so important because they don't have a choice. They have to accelerate AI because on the other macro force is this race against China for AI dominance. So when people listen to this podcast, and I've had a lot of people on the hedge fund side that have gradually migrated here because we talk about a lot of topics that are important. We approach them from a different perspective because you're coming from a different angle. We meet at Bitcoin. I think for people listening, one of the hallmarks of what you said, on the one side, the financial digitization that's happening, the guardrails that are going up, are directly related to all of the macro forces, whether it's the AI race with China, whether it's the job losses that are happening in the K-shaped economy. They're all linked together. The problem is for most people, and what I don't think they fully grasp, AI is the most important force now of those two. And I also believe it's the solution down the road.
Jordi Visser explains that AI is transforming work and productivity in unprecedented ways, making traditional employment increasingly optional rather than obsolete. He highlights that technological advancements, such as robots capable of building other robots and space-based data centers powered by solar energy, will drive deflation by drastically reducing production and energy costs. However, governments respond to these deflationary pressures by creating inflation through asset price growth and transfer payments, balancing the economic scales. Visser emphasizes that while innovation accelerates efficiency, it also creates challenges for small businesses, which may struggle to survive in a high-interest, AI-driven environment. Visser also points out that the future of business growth lies with smaller, agile companies that can rapidly adapt to AI integration. Startups and small businesses, though limited in scale, can leverage tools from major tech companies like Google to compete effectively, while larger public companies face friction from bureaucracy and inefficiencies. The convergence of AI agents and ubiquitous coding is set to revolutionize how ideas are deployed and monetized, altering the value proposition of traditional growth companies. Visser argues that this shift will create a rolling recession for inefficient businesses but will open opportunities for innovative companies that can harness AI effectively. Let's get back to the interview.
I like if we sat here and we went through, let's think about that. He's not saying all jobs will be lost. He's saying work will be optional. That is what I believe with AI. That is why my goal for the next few years is to help people start to use it, especially younger people, and realize that it's going to be an empowerment thing to be able to build things with it. His point is the deflation is going to come. Robots will be able to make robots and they'll be able to make everything that we need to do the stuff. The energy costs will go down. He talks about something Google's talked about too. So if people haven't heard this, the reason the energy problem will be resolved, the data centers will eventually be in space, collecting through solar panels. Google's talked about it. He's talked about it. Google's talking about launching their first one in 3 years. The amount of energy that's in space with the cooling makes it natural for a data center if they can do this. So why does Elon Musk have Starlink? Why does he have SpaceX? Why does he have Tesla? Why does he have X, the cross section of all of these things? So the Elon Musk thing gets into this concept of the deflation is coming, but to go back to what Jeff Booth has said, this is the natural course of governments is they have to cause inflation to some degree. And part of that is by making asset prices go higher at the top end, and then at the bottom end, giving transfer payments for people who need money. So if you're going to do both of those things, okay, we can't let stocks fall, and at the same point, we're going to give money to people that are not participating in this. That's why you get this inflationary pressure side to offset the deflationary pressures which come from innovation. And that's what Elon Musk was talking about. So small businesses are losing jobs right now. Now, that is a net number. So if you walk down the streets of New York and you see a small hardware store or a small restaurant go out of business, that fits in those numbers. What you're not seeing is Cursor, and you're not seeing Sylvia, and you're not seeing these new businesses that are getting started at the same time. It's just that those businesses are starting with very few people. The restaurant has lots of people. Like the more people you have in a business, the harder it is, I think, to thrive in AI. So for the people who are traders out there, when I made that comment about factors, this is really important because you brought up a point. I think for the next few years, people should think about zero job creation. I believe that the hiring thing will just go down. Small businesses are too small, like startups are just too small of an economy. So if you took everyone who's starting a Cursor right now and you added them all up, it's a very small number. But if you did something and said, what do those people use in their business? Do they use Microsoft or Google? Well, you know they use Google. They don't use Microsoft. So Google dominates these small businesses. They're flexible. They're younger. They're agile. At the same time, you have these public companies, which are bigger. They have people. They have friction. They have bureaucracy. That is not good in a world of AI. You want to have the smaller things because you can grow rapidly. So what is going to happen is a rolling recession where a lot of businesses that are inefficient will go out of business that can't survive in a world where rates are still up here. It's a problem. 4% yields is still a problem for a lot of businesses that have been struggling to survive. You've seen that with the private credit stress. The big companies, the banks, the healthcare companies, they're going to be more efficient going forward. Will they be doubles like NVIDIA was? No, they'll just grow at maybe 25% in terms of the stock price. I think where people want to start to focus their attention on is something I've talked about, and something that I think we should spend some time on. The most powerful part of AI is about to happen. First of all, you're going to have this convergence of AI agents and vibe coding at the same time. So coding has become ubiquitous and is now as good as humans, or at least close, or let's say as good as 90% of humans. At the same point, you have AI agents coming. So the ability of them to do the code and create things, which means the deployment from an idea to an app, the idea to making money, has now changed. That means every public company that's built on code, I don't know how you value them 3 years out the same way you did. That's why growth companies that are based on code are going to have a hard time. Where I think you're going to see doublings, and I'm going to use one company as an example. Do you know what Corning does?
No. Oh, like the big industrial company.
Yeah.
AI and technological innovation are fundamentally reshaping the global economy, gradually making traditional work increasingly optional as automation and energy-efficient solutions reduce the need for human labor in many sectors. At the same time, governments implement inflationary measures through rising asset prices and targeted transfer payments to counterbalance the deflationary effects of rapid innovation, resulting in a complex and dynamic economic landscape. Smaller, more agile businesses and startups are uniquely positioned to thrive in this environment by adopting AI tools, leveraging ubiquitous coding, and capitalizing on digital infrastructure, whereas larger, bureaucratic companies often face challenges in adapting to these fast-moving changes. The convergence of AI agents, advanced coding capabilities, and digital platforms is not only transforming productivity and business models but also redefining how value is created and measured across industries, signaling a profound and lasting shift in investment opportunities and the broader economic order. How will the widespread adoption of AI and automation impact the long-term viability of traditional businesses versus agile startups? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.